We kick off as one should in a global energy outlook in China this morning with Dr. Wang Zhen, president of the Chinese National Oil Offshore Company Energy Economics Institute. And we are very glad to have him with us. No better voice, the anchor of the global oil markets really has been the incremental China demand growth over the last 30 years or so. Welcome, Dr. Wang.
Hello, so it's my pleasure to be online.
Thank you, Dr. Wang. Dr. Wang, let's start out with the sort of standard Chinese question. Every year, the Chinese government identifies a growth target for the year ahead. Again, like last year, the Chinese government has identified that the Chinese economy will grow this year by 5%. What is your expectation for reaching that target? It would appear last year was very difficult to achieve it. This year, the Chinese New Year begins. The World New Year begins. How is your thoughts on China achieving this year's 5% target?
Yeah, so 2024, we know so the Chinese government targeted the 5% GDP growth rate. So until now, so even the government didn't release this number. So from the most of the institutions and the news and believes so the 5% GDP growth rate would be arrived in 2024, and on the 2025, so most and more news released, there's a GDP growth forecast. So I believe so the 5% also may be the target for this year. So as you know, 5% of GDP growth rate is very important for Chinese development, especially for the employment. And
but is it achievable? Is it achievable?
Yeah.
Is it real? The world needs to know that China data is real. Is 5% realistic? We've started the year, the Chinese stock market has been collapsing. There's the bonds, the outlook for the 10-year bond is at a near record lows. Deflation has become a very big problem for the Chinese outlook. Is it realistic to target 5%?
So as you know, so I just predict the 5% is necessary for the development as well as for employment. So of course, so it's we face the external server challenges and also domestic hard difficulties. So it's very hard to realize this target. But anyway, so we know the next year, so as the 2025 or 2024, so we also know it's very hard. But now, so I believe it's almost can realize this target. And for the 2025, I believe the 25% is also very hard. But I believe so China as internal a big market as well as reform policies are released, and more local governments and the central governments release their policies, especially to let the market dominate the policy can be much more and more important, play more and more important role. So
how important? I mean, the realistic outcome. How important? What role will stimulus play? We saw in the last part of 2024, the Chinese government finally started to unleash some stimulus measures. So far, they haven't really worked. What is your expectation that the Chinese government will continue to install a stimulus into the Chinese economy? And what could that look like? What does it need to look like for it to be effective?
Yes, I agree with you. So the Chinese government, without that, will take much more stimulus policy. So, and in the 2025 will be somewhat different from last year. So government will take much more active policy. So maybe we can also much more active the fiscal policy, as well as change the monetary policy from the modest to the somewhat active the monetary policy, and also some the industrial policy. I believe so the much more active policy will let the market participants can relatively easy to access to the capital, and that sometimes stimulus the consumers to consume much more in this year.
But the Chinese consumers, they want to save money. They want to put money in the bank. They do not want to spend money. How can you make the Chinese people spend money, buy things?
Yeah, so traditionally, so of course, so the Chinese countries is save money and save money to the bank. So, but we know so more and more young generations, we know so they have the different the attitudes towards the consumption. So, and also the government, the central government and the local government adapt or adopt the active the consumption policy. So it's as the last year, especially we also since the December, July, June, and we also November. So more and more active consumption policy released, and especially so the government pushed the all the encourage the consumers as well as the companies to buy new products or the new subsidy to as well. So the government takes some of the active or the encouraging policy. So I believe so we also this kind of policy has still played some roles, and I believe in the 2025. So and the more active that or encouraging policy, especially for the consumption policy, will be released.
You expect more. You think the Chinese government will give more stimulus? Yes.
Yes, sure.
Yes. What about the final question for you, Dr. Wang, before we bring up our second interview this morning? That is, Donald Trump is coming back to the US presidency. He has also already made it very clear that he's going to put more tariffs on China. What impact will that have on China, and how will China react?
So we know so the United States, the elected President Donald Trump had released some of the policies, especially on the add the import the tax. So without that, so this kind of policy will have the not the good effect on the international trade. So and China, of course, is one of the biggest trade partnership of the United States, and this kind of policy will harm to the bilateral relationship, especially so the economic and the trade. So and for China, of course, so we know that China's very big market, very big internal market, and just this week, so the NDRC of the Chinese government released a policy on how to develop the internal or domestic market. So the most important thing is how to let the different processes can easy or
What
easy
will
to
China
attach
do?
to.
How will China react to this tariffs? Will they
Yeah, sure.
retaliate? What will retaliation look like?
Yeah, so I believe so is once it is expand the domestic consumption, and at the same time, so we also expect the trade with the world. Of course, so if the United States takes much more policies on the import the tax, so maybe can expect more and more to the developing countries with especially to the Europe and the Belt and Road areas countries.
So the
So
Chinese will look for other markets.
yeah, sure.
Will they retaliate to the US? Will they ban the export of rare earth minerals? Will they ban the export of oil products? What are your thoughts on that?
So so the China is one as the biggest of the oil products import. So the China
Exporter.
China would like to import more from the United States as well as the world. So, but we also depend on the market, depend on the advantages of the different the products. So I believe this kind of policy will have some implications of the effect to the international oil market.
Right. Let's finish our session with the survey question here before we go to the second interviewee. How do you expect China's economic growth in 2025 to influence global oil markets? Will it, one, increase oil prices due to higher demand from China, stabilize oil prices with moderate demand growth from China, or decrease oil price if demand weakens from China? How do you expect China's economic growth in 2025 to influence global oil markets? One, bullish; two, little impact; three, bearish. Which of these three do you think that China will impact oil prices? Your last comment, Dr. Wang, how do you think China will impact oil prices in 2025? Will it be bullish, as it has been for 30 years, or will it be bearish?
So I believe in this year, 2025, so the oil price will lower than the last year. So just because of the world economy is not so strong, and also the supply side, I believe so we are much more supply from the non-OPEC plus countries, and especially for the China. So we also the oil products, all the refined products almost amount to the peak. So that means more and more EV and LNG will replace some of the consumption of the gasoline and the diesel. So that means the oil price would be low than that of last year, maybe the $5 to $10 on average.
Lower than last year. Last year, the average was $80 on Brent. You expect the average for 25 to be 70 to 75?
Yeah.
And you also expect China to reach peak oil products demand this year.
So yeah, it's almost so. And also the gasoline,
gasoline
would be,
and diesel.
Yeah, and diesel, but with jet fuel, we'll have big expanding room in the future.
But this year, you expect China peak oil products, diesel and gasoline demand in 2025, and you expect Brent to be between 70 and 75 average.
Yeah.
Okay, sir. Thank you so much. It has been wonderful to have Dr. Wang Zhen kick off the 15th edition of the Global Energy Outlook Forum, making his forecasts, seeing peak oil products demand in China this year for diesel and gasoline, and an average on Brent from $70 to $75 a barrel.